Hello everyone, hope you all had a great trading day. In today's video I'm going to go over a recap and also a snippet of the live trading room where I go over my detail and plan and explain my thought process live in real time. So coming to the day today, I told the group that, I told them first of all where I wanted to get short at, but I also told them in the live chat that, that below the first support at 63 to 67, the next zone is going to be 50 to 53. And this was the area where I wanted to get long at. And I said this at 7:04 a.m. in the chat. I said this before, like out the open in the live trading room, that I want to go long in the 50s, low 50s. And the reason why is because before we opened up the RTH session over here, we have people buying from this zone 1, 2, 3, 4, 5 times. Okay, so now you have lots of longs. Every long who wanted to buy this zone has now gotten filled, and every time you test the zone, there's less odds that it's going to hold because now you have just less buying because whoever wants to get long has already gotten filled. So then you have some type of scenario where if we start to snap the 62, 61 zone, we're going to trigger stops and wash everybody out. So this is why I did not want to go long the first test back into the 62 support zone just because of seeing what happened in the pre-market. I wanted to wait until it snapped, everyone stops, wash them out, and then go long once it gets thin on the sell side. Over here, it's heavy sell side. You have, even if it bounces very small, like a 4 or 5 point bounce, you have people who have been stuck long for hours with no real movement in their direction, and they want to exit the market. So if you're buying here, you're going against the wave. Like this is going against the overall market direction because now you have people who are all stuck on the same side, and you know how that goes. If everyone is on the same side, it almost always goes the opposite direction, right? So I didn't care about this long. I was waiting for the stops to get ran and have it wash out into the first support zone at 53 to 50. And I told the guys in the room as well that the advanced decline was very strong coming down into 50s, like over here. Yesterday's settlement I think was 59. Yesterday's close was at 59.25. So when we come down and we're minus 4 or 5 points from yesterday's closing price, and we're still plus 1,000 on the advanced decline, even if for every 100 advanced decline points you get only one ES point on a really choppy and slow day, this would make it that the ES should be at least plus 10. So if we're at 56 and the ES is minus 3 or minus 2, and the advanced decline is plus 1,000, this should be at least 12 points higher. So seeing this, I was licking my chops. I was ready for this long play at 53. I was waiting for this. I knew that if it came down, I can risk 2 or 3 points for a move back up into 60s and 70 and make about 15, 20 points on this trade. So I was waiting for that, and I was hoping that right here when we came back up into the first zone, failed, snapped 740 right here on tick. It was looking pretty weak. I was thinking, okay, sweet, this is going to be it. It's going to snap. It's going to wash. Their stops. I can get long right here at the best price. I can be long where nobody else is long and where everybody's stopping out. This is the best price I can get long at. The advanced declines are very strong. All the advanced decliners are very strong. All of them are positive. So there was no risk really in buying 50s just because of seeing how strong the market was internally. This was mispriced. It was So I was looking to take it back into equilibrium. And once you started doing this, I was like, okay, whatever, I missed it. It's not a big deal. This was pretty obvious. It should have happened because of the way it was mispriced down here. The market should not have been here. And the breadth as well, when it came down to 50s, was positive over 2 to 1, 3 to 1. So everything led to the odds just being highly skewed to the long side. And if you were short here, that was definitely something that was not going to work out just because of seeing how strong the market was internally. So now I'm going to get into the live stream that I recorded this morning. I'm going to show you guys live my thought process when we're down at these levels and what I'm thinking once we're at these levels. And if you guys have no idea what this is, I explained all of this last night in the Start Here channel, so I recommend going there first and then coming here. So the delta is pretty weak off the bat, even though our tick is holding positive, the delta is weak. So that shows me that the sellers are being more aggressive here than buyers. Although the buyers are holding it up, the sellers are hitting it on the bid. So it would not surprise me to see this 65 zone snap at some point today. Just seeing that. Essentially, there's no trade here because you have a two-sided market. You have tick holding of 0, but delta showing negative. It's two-sided. There's no real direction or clear odds. Like the odds isn't. I don't know if it's going to hold or not. It's not very clear to me. If this was holding above 0 like this, and if the delta was instead of this, if it was doing this, that'd be a much higher odds play. That'd be a 70 to 80% play. Right now it's 50-50. This is nothing that tells me that we're going to hold. If anything, it tells me that we're just going to shop around between the mid 60s and low 70s. So I just wait. That's all I do. I just wait. So now we're going to come back down to the zone again. It would not surprise me to see if this snaps. You have sellers who've been hitting it aggressively. Minus 4,000 delta. You have 4,000 more contracts being sold on the bid than on the offer on the market, at the market. So aggressive sellers now. Tick holding above 0 still, so it's still two-sided. And breadth went over 4 to 1, so there's no clear direction. You have sellers hitting the market, but with the internals holding positive, at the same time, they can also potentially even hold 60s and squeeze them out. In my opinion, the higher odds is that we snap the mid 60s and test low 60s just because of how many times we've tested this zone already. It would not surprise me to see them wash the stops, but obviously anything can happen. And with these strong internals, on the flip side, you can have shorts who've been hitting it all morning long in the first 15 minutes or so, get squeezed out. It can go both ways. So there's no trade for me here. And the liquidity is also very thin. Usually you'd have 4 to 500s lots on the bids and offers, but now there's nothing. It's a very thin market. Can't do anything here. Just gotta watch it, that's it. Let's see if it takes their stops below 65. Below this V, then you have the Q, and then that's it. Gonna snap them. Now on the flip side, okay, so here's the bid popping up now for 475. It's nothing, but on the flip side, if we do snap 65 and hold, that's going to be a key tell that the buyers are actually hiding in this market and they're going to soak this back up. If they snap 65 and the selling stalls and holds, then that's decent odds that's going to come back up and test high 60s. And the tick is only minus like 230 at the lows. So that was a setup that I would take if we snap 65 and soak back up, but since we've tested it already so many times, it's something that I'm just going to skip. If we only tested this zone once or twice and we snapped it and came back up and soaked the stops, I would have been long for a squeeze back up. But since we've already tested 1, 2, 3, 4, and now 5 times in snapping, that's not something I would take. Even if we snapped it, soaked, and came back up, I would have skipped it still. So it took out their stops, it snapped, Q. If we come into low 50s, like the 53 to 52 zone, I'll look for a long setup. Once it washes everybody out, then it gets thin on the sell side and it can bounce pretty easily. But as of now, it's pretty heavy. I don't want to get involved here. but low 50s I'll get involved if it sets up properly. So as of now, just watching back. So you have the selling stalling, you have a bid popping up now in the market. We're in support. It's not something I want to take though, just because I know below 60 it's going to wash even more. Like this might just be a small bounce and that's it. Even though it can go to 70, you just have so many people who got long in this zone, and it's just, for me, it's too heavy. I can just tell it's too heavy. I don't want to be long when the market is already heavy on the long side. I want this first to snap them, wash out all the longs, and then I can get long once it gets light. This right here, if I get long here, I'll be stressed out. I'll be thinking about all the guys who got long here, who are now looking to sell for break even on the pops, and I'll be screwed holding the bag at a bad price, and then it's going to snap against me and wash out. So I don't want to get long here. I avoid this, even though if it might go, I don't care. It doesn't mean anything to me. I'm always looking for high probability trades. I don't care if it goes now, because obviously in hindsight, everything looks perfect, right? But in real time, this is not something that I would want to take 1,000 times in a row, because the odds are just going to be about 50-50. It can bounce small and then snap back and wash. For me, I'm a lot more comfortable once it washes out everybody over here in the 60s and 70s down to 50s. That to me is a good trade in low 50s. So I'm still waiting. Even though for some people, it may have been a pretty clear setup. Once we snapped 65s, maybe the selling stalled, we got the buy and balance and the bids popping back up. That may have been a good setup for some, but for me personally, I just like to keep the stress low. I've been high stress, I've been low stress. I prefer low stress every single time. So this is the type of bounce that a lot of traders actually will get stuck in long. They see the market came down to bounce and they get FOMO and buying over here. But what they don't see though is that the delta is still super negative and the bids were at the low 60s. So the guys who are buying mid 60s are putting themselves in a pretty stressful position, because there's nothing really going for them. This is just a chop zone right now. If we look at the volume for once we broke down 68s, the highest point of volume near us is 65 to 66. So this is the fair value right now, and people who are buying here are pretty much buying at the fair price. There's no real edge buying here. So that's why I just don't want to be involved right now long side. And I also can't go short because we're in support. It's just not what I do. If we came up into 90s on a nice fast squeeze, push everybody out, all the shorts out, I get short. Then above this high, squeeze them out, and then stall, and then you know it's going to come back down once the buying is all gone. But right now I can't do anything. No trade for me right now. No edge. And the delta still sucks for buyers. And these bids are, I just saw them pop in and pop out. Not sure if this is a real bid or not. Even if this bid was real, the market is so thin that this is nothing. It's a bid for 400. It's not. It popped out again. He's popping and popping out. He might be looking for shorts up top. So what he might be doing is he might be putting his orders in. He might be looking for people who see his order, go long, and then he goes short once they see his order, and then he pulls the bids and covers back down. That's what he may be doing. He might be playing games here. I know it's a bit hard to see because it's a very small order relative to what we usually see, but I mean for now it's decent size. It's 2 400 lots, so that's why it's thin and hard to see, because I don't want to see this. It's just not really worth my energy to see 400 lots. But in this current market environment, this may be fake, and he may be looking for shorts above to bring back down and pull the bids. That's just one thing that he may be doing. It may be a game. Like even if you're to buy at 68s, your invalidation point is going to be below 62. So that's a 6-point stop you're looking at. And if you're buying 68s, I mean, yeah, your target might be in the mid 70s, but if your stop is 6 points, you can't take any size. That's just way too wide. You can't be aggressive with that. It's just not worth anyone's time to take a trade that has a 6-point stop on intraday time frame. If you're a swing player and you're looking at a big picture move, yeah, a 6-point stop is nothing, but on the day time frame, a 6-point stop is huge. I can't do this. I'm just watching for now, I'm waiting. My main play, like I said earlier, is going to be in the 90s to 2900 to 05 zone. That's going to be the big 15 to 20 point move that I'm looking for. I'm pretty much waiting for that. I'm just stalking, waiting for the trade to come to me. So a pretty slow start to the day, huh? Half an hour and not much has happened so far. We had one very mediocre setup at the low 60s. I would never have taken this long side, even though it was okay. It wasn't for me, but that was pretty much the only trade that I've seen so far. That's about it. When the bids pop back up and we snap 65, the selling stalled, we got the buy and balance. That was the only okay uh, trade that I've seen the entire day that could have been taken, but it's not for me. So we have an offer popping in, offer popped out. There's no real conviction here in this market. They have no idea what to do. So when there's no conviction, you can expect balance. So if we get away from balance and start to get emotional and wash out their stops, that's just short term, because if the majority of the day was balanced, if you're going to have a 15 to 20 point emotional stop out move, that's not going to last, and it's going to most likely get faded back into value. So I'm looking for whoever is getting long in the market in this area to get stopped out below 60s into low 50s, and then I'll get long if it sets up properly on the footprint and the internals. Breadth is staying flat. Like I said, there's no real clear direction. They have no idea what to do with this market. They're just trying to get the retail whipped up. That's about really all this market is right now. It's about taking money from retail and putting it into the big boys' pockets. That's all they're trying to do right now. We cannot trade this. If we try and trade this, we will get whipped out, stopped out, and it's just a headache. Trading is a lot easier when you can just sit back and wait for it to come to you. That's what I've been doing past years, and my stress is lowered dramatically. And I can also make a lot more money this way, because I can just I can put the orders in, sit back, wait for it to hit, and then I can exit once it's back into value. And that's just way easier than trying to scalp for 1 point, 2 point. It's just annoying if you're trying to make money in this range. It's pretty much not even worth anyone's stress or time or energy. And you can also see on the delta, on this bounce back up, the delta did not move. So the buyers are nowhere to be found. I mean, this is just a trap retail. I would never trade this. Just watching, that's it for now. Okay, let's see it. If we snap and get low 50s, I'll go long. If you do something like this, snap, wash, stall, 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 back up into low 60s for 10 points. So I can go long maybe 52, 53 with a 2 point stop or so before I move back up into high 50s, maybe even low 60s, about 7 to 8 points. So that's about 3 to 1 reward to risk, if that comes. That's the high odds play. 53 to 52 half is also a order for level that held a few times on Friday and the Globex. So should have a reaction on top of that too, being there, as well as being a big support zone. And once it comes back down into it, if it comes into it, once I enter, then I have to see the tick hold above 0. If tick is peaking out below 0, once I'm long low 50s, I'll exit for break even or a few point profit. I'm not going to overhold it if the internals are saying to get out. If it bid for 1,000, look at that, he pulled it. This is a game right now. It's a game. They're trying to trick traders into getting long, wash them out. That's all it really is. Delta, no real bounce. No real buyers in this market. Only sellers, that's it. Stops. I need about 5 more points though. Bit deep out. Almost there. Look at this. We saw this coming from mid-60s. We saw this coming. Tick isn't that horrible though. It's only minus 550 or so. So that's a big tell. On that stop run, the tick was only minus 550. So the sellers aren't that aggressive, and the buyers are still there. So when we do, if we come back into low 50s, if we get into low 50s, knowing that on the stop run the tick was only minus 550, that just gives me more confidence on the long side. If the tick was minus 800 plus on this washout, then I'd be very cautious buying low 50s. But since we only saw minus 550, that's not really a big deal. It just shows that the buyers are active in this market still, even though the sellers are a bit more aggressive. So that's something I want to see if I'm going to buy low 50s. And I may not get this bouncing a few points ahead of my entry. This could be a setup where you could scalp a short now that we've broken this zone off mid-60s, but for me, I'm more interested in the long play low 50s and the short play in 90s. I don't want to get involved in this center chop zone. It's just not for me. I want to be outside and then I take it back inside. That's where the money's made, not here. This will give you stress, headaches, and it's just going to be a bad time. And trading is not about being hyperactive and scalping. It's about being calm, relaxed, and systematic. That's all it really is. If you can do that, then you'll be profitable. You want to wait for them to get washed out and then we go. This is not enough. We need more wash. Essentially, what we have to see is boom, 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 red, and then stall, absorb some bids, the buy and balance, route support, and then go long. And if tick is holding above 0, we hold it for the next zone for a big 10-point move. But if tick is holding below 0, once we enter, then we exit for a few point profit or break even. Offer came in, they pulled it. Feels like there is a seller in the market. Selling it. Almost there. 52, 53. 51 to 53 is the area we're looking at to buy for a bounce. Tick holding below 0 still. So can't buy here. Even though it may look nice, you have to respect the market. And if the tick is holding below 0 and we're at support, if you take this enough times, the odds will not be in your favor or 50-50. And I'm looking for more than 50-50. So even though this may bounce and it may look okay here, I'm looking for just about 2 points below this. And this is mainly what gets a lot of traders messed up, is they see it get down to a level that they wanted to buy, it bounces, and they say, oh crap, and it comes back down again, and then they buy the second time down, and the second or third time is when it snaps usually, and that's when they get washed out. So you have to be aggressive. The first time it comes into your level, you have to enter trusting what's happening in the market, that you're buying at the best price. Everybody is getting stopped out. You're buying once everybody is getting stopped out. Once you enter, how much more can it really go if you're buying at a clear support zone? And after a big wash, the first time down into it, it's a very high odds play. The breadth got cut in half. It was at 4-1, now it's 2-1. Still nothing. I don't want to do anything here. One thing as well that's making this a good opportunity, if it does come back down, if it does come down to the low 50s, is the advanced decline is plus 900. So if the S&P is going to be flat on the day or even negative, if it comes into low 50s and advanced decline is positive, internally the market is strong. There are more stocks green than red, but the market or the index is negative. So that's an imbalance, and it's called a bullish disconnect, and it should rebalance itself once the emotional stop outs are gone. So that's why it should be also a good opportunity for a bounce as well. So everything is in the favor of buying low 50s. On this bounce, the delta is still nicely negative. No real bounce on delta. The sellers are active still. The sellers are in this market hitting it still. And the buyers are just not really getting anywhere with this. That was a nice slam. If they take out 55, I suspect that they may run some stops and give us the 52s. 52, 52, 51, bounce back up into 57, 58. 6-8 points. If delta starts to hold and the tick gets above 0, then I'll hold it. I'll hold a piece for mid 60s. So this should be a good trade if it comes down. If it comes down to low 50s, it should be a good trade for at least 5 to 6 points minimum. And if it works out well, it could be even a 10 to 15 pointer. Well, very mechanical buying. The buying was very mechanical. Just went tick, 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 up, 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 like robots. I was looking for this exact move to happen at 52s with the advanced decline being plus 100. That was a very clear positive disconnect on the internals, and this would have happened very soon, and it just so happened that it came about 5 minutes ago, which happened in the low 50s, not mid 50s. Because if I had to buy mid 50s, then my invalidation point is below 49, so I'm risking 6 points for a 6 to 7 point bounce. That's not. I don't like to take 1-to-1 trades. I like to take at least minimum 2-to-1 reward to risk. So that's why I was looking for the low 50s. I'm going to give this about 20 more minutes. If you don't get low 50s, then I'm going to put alerts in for near high 90s for a short, or at this point the low 40s for a long. If we don't get the low 50s in the next 20 minutes or so, might come back down. At this point, since we already bounced off 55, and I wanted to buy at 53 when it was over here, and we already bounced ahead of it. So now I'm going to pull it back by 2 points, so 51. Because now you have people who got long at this zone who have to get washed out, who might cause it to go a bit deeper than 53. Does that make sense? Delta on this bounce, nothing. The tick is two-sided. So internally, the market is very strong. All the advanced decliners for every index is positive. So if the index gets into negative territory, that's going to be a very good trade. So now we have a lot of longs stuck right from the in the morning or in the first half hour or so. So if you want to play off the volume with the average price off VWAP and go short of VWAP, that may be a good trade on the first test back into VWAP. We have all these guys who are stuck long and want to get out break even. The first push back into VWAP may be a good short for a few points scalp, but that again is a scalp. And if you aren't a scalper, I would not recommend that. And I have my VWAP at 68.25 right now. So if you want to scalp a short at 68.25, that may be a good trade, but it's again a scalp. Okay, let's go. Come on. It's really playing a game with us. It's teasing us right now. Pretty funny. Gets into low 50s, mid 50s, then push. Nope, goodbye. That's okay though. There's always the next trade. Doesn't matter. And good trading is mostly about sitting on your hands, waiting for the trade to come to you. If you're a trader and you want to make money, it's not about going out there and looking for trades and making scalps left and right. It's about sitting on your hands, waiting for the best opportunities to come to you, and then once they come to you, you attack, you enter without hesitation, because you've already done your homework. You already know where you want to enter. So once it comes into your level, you aren't a deer in the headlights. You know that you want to enter, and you enter. Analysis that you've done prior to coming to the market, that these zones that you want to execute at are going to be high odds zones the first times that they come into the first time it comes into the level. So by knowing this, we're able to execute with accuracy and precision without being stuck. Like a lot of traders, when they come into the market, they don't have a plan. They don't have any idea of what to do. All they do is go in there looking for trades, and that, in my opinion, is one of the biggest reasons why traders lose. By being able to sit, we're able to come to the market and observe with a clear mind and not be emotional, and look at the exact levels that we want to execute at. And if we didn't have this clear state of mind, if you're scalping and the market comes down to 52s and you just took a 5-point loss, your state of mind would not be in the correct place to be able to go long at the best zone, because now you're in a cloudy, foggy state of mind, and you're just thinking, oh no, might go lower, might go lower, might go lower, when in reality, this is the best spot to go long at. So this is why we avoid scalping. All we do is wait for the best trades to come to us. Okay, let's see it. Just a few more points, snap the low, get some stops, and then we go long. Come to Papa. Okay, almost flat on the day. Advanced decline is still plus 700, very strong. Breadth is still positive, and tick is not horrible. So this is still a good setup. I'm looking at 51. The 50% on the day at 65.75, the halfback has 7,000 contracts traded at that price. So you can expect some longs to be stuck there. If you're a scalper, this is an area that you can scalp a short off of, probably. I wouldn't do it though, but if you're a scalper, this is an area 65.5 to 66.25 that you want to be looking for a scalp short if that's your personality. It's not for me though. So delta, this is the first time that the delta has bounced. This small blip of volume coincides with the halfback. So again, if you are a scalper, this is an area that you can go short off of 65.5 to 66.25 if you're a scalper. If we push above 67, I'll cancel that. Okay, this stops. This will get slammed back through. This is thin. If you go back up into 75, I'll go short for a move back down to 64 if this doesn't fill. This is bad structure. Nobody had a chance to sell here. This almost always gets filled. 0, 1, 2, this almost always gets filled. There's the fill. Wish to squeeze higher though. If we went to mid 70s, that'd be sick for a 10-point move, but not high enough for me. Okay. It seems like the market did not give us our trade. Low 50s. At this point in time, I'm looking at the mid 90s for a short back down to 80s. That's going to be a nice trade. And I don't think the market will come back down to low 50s within the next half an hour or so. It's rebalancing to the advanced decline. All the internals were very strong, so this is just it's rebalancing itself. It's rebalancing itself to the internals. So this, if it comes back down again, I'd be very surprised, and at that point in time, I would ignore it, because then it's ignoring the divergence. If it ignores the divergence the first time, then it probably means that it wants to go lower, right? So at this point in time, I'm no longer interested in buying low 50s. I'm only interested in shorting mid to high 90s. If you come back down and snap the lows though, and wash to low 40s, I would buy that. But low 50s, I'm no longer interested.